Namaskar. This is an introductory course on the system of national accounts. After doing this course, the participants will get an understanding of the basic concepts and definitions of the 2008 SNA. This is the first part of Session 1, Introduction. In this part, we will learn about how production of an economy is measured. In fact, we will learn what is GDP, Gross Domestic Product. Let us start with an illustration. In an imagined island country called Monodipa, there were just 5 families in 2015. There was no government and no interaction with the outside world. Each of the 5 families were engaged in some kind of production activity. Family A produced electricity and did some boat repairing. Family B did fishing in the sea. Family C did wheat farming. Family D turned wheat into flour, and Family E made bread out of flour. First, let us look at the families C, D, and E. Family C produced wheat worth 420 cowries and sold the entire amount to D, spending 10 cowries on electricity for wheat farming. Please note these numbers in your notebook. Family D produced flour of 660 and sold the entire amount to E, spending 20 on electricity for running the flour mill. Family E produced bread worth 1090, spending 15 on electricity. It sold all its bread worth 800 and rest was used for consumption of his own household. The question is, what is the value of production of the 3 families C, D, and E taken together? Clearly, the entire efforts of the 3 families finally produced bread worth 1090 cowries. Thus, the value of production of the 3 families taken together could at most be 1090. Is this the value of production of C, D, and E? Just by adding the outputs of the 3 families, we get the value of 2170 cowries, which by far exceeds 1090, which we have seen is the value of bread finally produced from the productive efforts of the 3 families. This is because counting the output amounts to double counting. Output of family C is counted again in the flour as well as bread. Similarly, the output of D is counted again in the value of output of bread. In measuring production, the idea of value added is devised by the national accountants. The idea of value added of a productive unit is founded on netting out of the value of goods and services used as inputs, which in turn are produced by other production units. The value of such inputs are included in the value of output of other units. For example, family D adds value worth 660 minus 420, that is 240, by producing flour from wheat produced by family C. The family E's value added by producing bread is 1090 minus 660, which is same as the output of D. Note that all the families had purchased electricity from family A for running their respective production activities. Now, let's define value added. For a production unit, measuring value of production requires netting out of value of goods and services consumed in the process of production from the value of output. This is called value added. The value of goods and services consumed in the process of production is called intermediate consumption. In other words, gross value added is equal to gross value of output minus intermediate consumption. The sum of gross value added of all the production units in an economy is called the gross domestic product, GDP. This represents the value of production in the economy. We have used the term gross. We will discuss the significance of this term in a different session. Note that the most commonly used indicator of performance of an economy is GDP. This is a measure of total production in the economy. It does not represent consumption or investment or welfare of the economy. Now, let us complete the illustration. Family A had a solar panel. It produced electricity worth 120. It sold electricity worth 90 to other families, used 10 for its own business, and the rest, that is 20, for own consumption. Family B was a fisherman household. It sold fish worth 70 to family A, 130 to other households, and consumed fish worth 50 in its own household. It also paid 25 to the family A for boat repairing services. GVA of all the families are worked out in this table. Output of A from electricity is 120 and it had earned 25 from boat repairing. Thus, its output is 145. but in the process it had consumed 10 cowries worth electricity. The value added of A therefore is 145 minus 10, that is 135. 250 was the value of output of family B from fishing. It had spent 25 for boat repairing. Thus, its value added is 225. Similarly, the value added of C, D and E can be worked out. The sum of GVA of all the production units, in this case 5 families, gives the GDP of Monodeepa in 2015. Note that the families had spent on payment of rent, interest and wages and salaries, but these do not appear in the calculation of GVA. For calculating GVA of an unit, only the gross value of goods and services used in production that are produced by others is netted out of the value of output. Thank you.